I'm gonna be real. Budget video for today. I'm actually recording this on Zoom because I didn't want to spend a lot of time editing it and making it look nice and all of these. I just wanted to get the information out because this is important. So let's ignore the introduction. Let's ignore the fact that my beard has been deported because I really want to speak about GameStop. Now, chances are over the past few days, you've heard the term GameStop or this name a lot, and you might not know exactly what it is or exactly what the news is, but over the next few minutes, that's exactly what we're going to speak about because for us as traders, and especially the retail community of traders, I'm talking about people who want to invest their own money in these markets. This is important, and this is definitely something that we have to keep an eye on. But before we get into it, I'm going to remind you, I'm not a financial advisor, as you saw in the disclaimer. So this is not financial advice. This is just for your education to know what's been happening over the past few days. Now, first, let's quickly speak about what GameStop is, just in case people watching this video might not know exactly what GameStop is. It's another electronics and a gaming retail store. And similar to a lot of the companies recently over the past few years or couple decades that haven't really adapted to how the world has changed and have actually encountered a lot of competitors, so has GameStop. So over the past few years, the sales have gone down little by little. The company has been on the verge of bankruptcy, but they never officially announced it. And don't get me wrong, there's news about the management changing and the way they're going to be operating changing, which can in turn help the company grow, but it's not necessarily the biggest deciding factor for a price of a share or the stock of that company to change. It depends what that management actually does. Now, for this to actually make sense for you, what I'm about to go through, you have to first understand how it actually works in the stock market when you want to buy and sell different shares. So buying it is very straightforward. It's like you buy a house at £500,000. If the price goes up to £1 million and you sell it, you make profit. It's the exact same thing with the stocks and shares. You buy a bunch of it. If the price goes up and you decide to sell it, you make the money with the difference that you've made over there. So you actually gain some profits. The thing is, in the financial markets, as you know, you can sell something and also make money if the price goes down. So you can take advantage of whichever way the market moves. And the idea of selling something without having it is also very straightforward. Imagine, again, same house, £500,000. I want to sell your house, but I don't actually own it. So what I do is I come to you, I borrow your house from you. I don't give you any money. I borrow your house, £500,000 I've borrowed from you. There and then I go ahead and sell the house. I borrow it from you and I sell it there and then. And I've made £500,000 profit and I put that in my pocket. I wait a month or two, the price of the house drops down to, for example, 450 grand. I go and pay that 450 grand with the £500,000 in my pocket. Then I have 50 grand that I have profited in the middle because now I have the house and I have an extra 50 grand in my pocket. I put the 50 grand in my pocket and give you your house back. In very simple terms, that's exactly how it works with stocks and shares. So instead of you actually selling it when you have it, what you can do is you can short sell it. So in a way, you're borrowing the shares of the company or borrowing the stocks and selling it when the price, if the price of that stock or share drops lower to where you actually short sold it, what you can do is you can use the same money to buy back all of the shares, but this time you've bought it at a cheaper price. So in a way, you're paying back your borrowed shares at a cheaper price and pocketing the difference, as simple as that. But there's actually one big issue with this style of investing, and that is your losses are unlimited when you're short selling something, especially if you're not managing your risk correctly. The example that I'll give you would be this. I borrow the house from you for £500,000. I go ahead and sell it for £500,000 there and then and put £500,000 in my pocket. 3 months later, the price of the same house increases now to £10 million, let's say. And now you're knocking at my door saying, hey, where's my house? Where's my money? You got to give me the money. That's how brokers do it, right? Whenever you get a margin call and all of these things, it's the brokers knocking at your door physically or virtually. So in a way, for you to be able to pay back the money that you owe or the shares that you have borrowed from them since the price has gone higher, since the same £500,000 that I borrowed from you in the form of a house is now worth 10 million. So what I have to do now is I have to take the difference out of my pocket. I have to take £9.5 million out of my pocket, put it next to the £500,000 that I borrowed from you, or the £500,000 that I got from the house that I borrowed from you in a way, go and purchase the house again since I sold it earlier. This time I'm purchasing it at 10 million just to give it back to you. So in that entire transaction, I have made a massive loss. And that's something that can actually take place in the markets. Imagine if you go ahead and sell a stock at $10 per share and the price increases to $100 per share and you've sold 10 shares. So in a way, $10 per share, 10 shares, you've sold $100 worth. Now the price of every one of those shares has hit 100. So now in a way, you're $1,000 in debt. So now you have to take the difference out of your pocket just to get your broker off your back. Now, this is going to be very important. We'll come back to that later. Now, let's talk a little bit more detailed about these hedge funds and banks, as they are at the end of the day, some of the biggest market controllers, if not the biggest market controllers. When you have a selection of platforms, companies, institutions, whatever you want to call them, that's added up together, they control tens of billions, if not more. They have enough money and enough capital for them to quite literally, in a way, shift the supply and demand of a share of a company, of a currency even, and an economy on the larger scales. And these are what you always hear as market manipulations. And this is something that's been going on for a very, very long time. It's nothing new. And here's a better way to understand that. Let's imagine this pen. Now, let's imagine there is only 10 of this pen in the entire world. And there's a lot of people who want this exact pen. Obviously, the supply is very limited, but the demand is very high for it. So this pen is going to be worth a lot because a lot of people want it, but not a lot of people are actually supplying it. Now, let's do it the other way. There's millions of these pens around the world, but there's not many people who actually want the pen. So what ends up happening is that the price of the pen drops. This is very simple supply and demand that any and every business, retail business especially out there, has to apply for them to be able to make money. The items that are not demanded enough, they decrease the price for them to be able to sell it. And the items that are demanded a lot, they decrease the supply or increase the price for them to then be able to make more from it. Now, when you have billions and billions and billions and billions and billions, and you have your eye on a company like GameStop, which is not that big, it's not a huge company. The market cap compared to a lot of other companies out there is not that massive. In a way, you have the power to shift the supply and demand of the shares of that one given company. Maybe not you alone, but you with a few of your hedge fund friends would most definitely be able to do it. So if you go ahead and short sell the shares of that company, so in a way you're borrowing the shares and you keep selling it, you're increasing the supply more and more and more, you keep pumping supply into the market, but there's not enough people who actually want the shares because people think that GameStop is going to go bankrupt. No one wants to actually invest their money in it. When there's not enough people buying it and you keep selling it more and more and more and more, what happens to the price? It drops. And this is exactly what you can see if you look at the chart for GameStop Corporation. And it's interesting that as I'm saying this, I just got a Bloomberg notification about GameStop. But anyway, I've just put this in replay mode a little bit just to not show what's happened in the past few days. But generally speaking, when you look at this chart, when you look at this market, it's very clear that GameStop, especially since around end of 2013, beginning of 2014, has been on this constant decline. Literally in 2014, from beginning of 2014, let's say around here, the price has dropped from $50 to $60 a share, all the way down to $2.5 per share. That's a ridiculous decline. Good way to think about this decline is imagine if a price of a house goes down from 53, 52 million down to around 2.5 million. That's how big the change has been over the past few years. And more than anything else, this is literally the institutions short selling GameStop shares. They keep supplying it and there's no demand and the price keeps dropping. And they've been doing that for a long time. They haven't just been doing that recently. It has been going on for a good few years that they have been selling it and selling it and selling it. But for probably one of the first times in history, the greed that these institutional investors have is costing them a lot of damn money. And that's why this is important, because this is, in my opinion, a very big historic event. This is going to be something that people will be speaking about for decades to come, because this is one of the first times, if not the first time, that the retail community, the people who are investing their own money, their own hard-earned capital in these manipulated markets, is one of the first times that they have actually got the upper hand. It's the first time that they have managed to direct the market in their favors. And people want to label this as market manipulation. I don't see it as market manipulation. They are simply taking advantage of the mistakes that Wall Street made itself. So it's just a bunch of normal people that did a bit of research and they realize that these people are greedy and realize that they have short sold way too much. And this is what I'm going to speak about now. In the world of stock trading and stock investing, you can actually short sell more than 100% of the shares that that company actually owns. So in a way, you can short sell over 100% of it. You can short sell 130, 140% of it. But here's the thing. If you sell it at $20 a share and you've sold 100,000 shares at $20 a share, and the price goes up to $50 a share, and you still haven't covered your positions, meaning you didn't close them, you are in a very big loss because you sold it at 20 and the price went up to 50. So, you're losing a lot of money. And that's when the broker comes knocking at your door saying, hey, pay up. You haven't got enough margin. Either deposit more money or close your positions and take the loss. But why would that happen? Why would the price even go and reach $50? And what has actually happened with GameStop Corporation? This is where I'm going to take it off replay mode, just so you can kind of see it for yourself exactly what's been going on. So again, just remember that the price of this stock per share, it kind of reached what? Where's the low for that? 2.57, so $2.57. That's the lowest that it actually reached. And right now is floating at 362 US dollars per share. That is ridiculous. 364, there we go. Long story short, all of these hedge funds that were participating in this whole GameStop situation, they are probably experiencing one of the biggest losses they've ever experienced. And it's their fault. Do you know why? Because they've been selling it for years and they never ended up closing their sell positions. It's like going to a casino and just, in a way, risking all of your money. You never want to do that. So they kept selling it, the price kept dropping, but they never closed it. They never ended up actually closing their positions and taking the profit out. They got greedy and they sold more and more and more and more. And over the years, they drove the price to the floor to $2.50. It was nearly $60. And they also short sold over 100% of the shares. And here's what the retail community understood, that this information is public information. So you can see what the shares of different companies are, what's the related news for these companies, what percentage of it is being shorted or is being bought or whatever. You can actually see all of this information. So for the people who knew where to look for this information, and they are in the loop with a company like GameStop, what would they do? They would want to have a look at the prices of shares, prices of stocks, what's going on with GameStop, and what percentage of it is actually being short sold. And people started to realize that, hang on a second, the price of this has actually been driven down to $2.50. And there's still over 100% of the shares that are being short sold. The price can't physically go below zero. So what's going on here? And people started to realize that Wall Street has made a big mistake. And they started to beat them at their own game. And I'm smiling this as a full-time trader. Don't get me wrong, I'm sitting in front of you with a big smile on my face saying this, because just because I participate in these markets doesn't necessarily mean I agree with how the financial markets are run on a day-to-day basis, or they have been ran ever since they started. Although we analyze our own charts from an institutional standpoint and we look at the markets from a slightly different perspective, we are still part of the retail community. We are still people trading with our own capital. We haven't got access to bank and hedge fund level capital yet, at least. So this was something that put a big smile on my face, because it's such a big win for the retail community. And it's such a big news for the Wall Street. It's shaking the Wall Street right now, because people realized that GameStop is being shorted over 100%. And they realized the greed behind it. And now they started to introduce the demand that didn't exist in the first place. What do I mean? These institutions were selling it. They were short selling it. There was no demand. So the supply was a lot of it, and the price started to come down. But what if all of that supply all of a sudden meets a lot of demand? What happens then? What if it's still being short sold, but then there's a huge number of people and a huge number of orders being placed in the opposite direction? Now you have a massive supply, but you have also been met with an even bigger demand, meaning what? Your product, which in this case is the shares of that given company, is now a scarce resource, which means the price is going to go up, because now there's more demand than the supply. And that's simply what happened. Normal, everyday people realizing Wall Street's mistake, coming together and just buying the hell out of GameStop stocks, to the point that they have now indeed driven the price all the way up to 370. And this is the weekly chart. So what you see over there is just 1 week. Let's go to daily chart. You can see that this move was very recent. It's over the past few days that we've had this spike to the upside. And it's crazy. Do you know why? Because all of these institutions who have initially sold their shares of this platform, whether they were selling it even, for example, over here at let's say what, $30 a share up here, or even higher at $60, or down here, for example, let's say at $16 or $2 or whatever, wherever they were selling it, it doesn't matter anymore. Their short positions that they have opened are still open, and now they are in a loss because they have sold a borrowed house, and the price of that borrowed house just went from $2.50 to $367. And the interesting part is when you look at the different news and the way they are portraying these retail traders or this Reddit community that have actually managed to, in a way, beat the Wall Street, they're portraying them as these very bad people who've done something extremely wrong, whereas in reality, it's been the Wall Street itself for decades, if not more, just manipulating the markets and doing the exact same thing. This time you made a mistake and you're going to pay up for that mistake. I was looking at some of the figures for the losses yesterday in terms of how much people or the companies have actually, in a way, lost because of this move. And this, what's written over here, is probably one of the first of many victories that's about to be experienced over the next few days or weeks to come, in my opinion. Victory as $13 billion hedge fund closes position. So how much loss did they end up closing this position? And this is probably one of the hedge funds that's involved in this, if I'm not mistaken. But let's have a quick look at exactly how much they lost. Hedge funds and other that bet against GameStop have collectively lost more than $5 billion, according to data analytics company. It's more than that. It's more than $5 billion because it was more than $5 billion yesterday when the price was at 140. Now the price is at 360. So it's going to be more than that. There's probably not much news that's going to come out now, but definitely over the next few days, there's going to be so many different news that are going to be speaking about the losses, because all of these hedge funds either have to actually close their positions at a loss, so take the multi-billion-dollar loss because of their greed, because they short sold so much and the price rose so much, or they have to, in a way, put more money in their accounts, so have more margin to be able to handle these drawdowns. And the other scenario is making the general public who have bought these shares, asking them to sell it. But here's the thing, why would the general public do that right now? Why would they sell it? Because they know the more they hold onto it, the more the Wall Street is going to bleed. And that's exactly what's been happening. Have a look in the news for yourself. Start reading about these things for yourself. Keep on top of the news about it. Keep on top of how much different platforms are losing, which hedge funds are involved, and all of these things. Again, I'm not saying buy it or sell it. This is not financial advice. I'm not a financial advisor. This is just a video explaining what's been happening over the past few days. So any type of investment you want to make is at your own risk, and you have to do your own research for it. Just do your own thorough research before taking on any risk. But I'm not going to lie to you. It was pretty interesting to read about all of these things in the past few days. And I'm really looking forward to more and more news that are going to come out, because there's a few important things that were just proven with this move that took place. And that is, we truly have a lot of power. Maybe not necessarily in the foreign exchange market yet. We are talking about a market that's much larger than the stock market. At the end of the day, they don't compare. Foreign exchange market is much larger than the stock market. But the idea behind it is very similar. And it's beautiful to see how a community of people have come together using the technology, using the stuff that's very freely and readily available for us right now to educate themselves, to look out for a few things and make the right trades. And look at that, beautiful. Now it's sitting at 360. I wonder where it's going to be over the next few days. There's probably going to be a lot of investigations and a lot of different things kind of happening, I would imagine at least. I feel like it's a bit unclear about what's actually going to happen over the next few days. But this definitely did put a big smile on my face to, in a way, see people's greed. And in this case, not the retail community's greed, the institution's greed actually cost them. So listen, I know this is not the type of video you're normally used to that I post on this channel. So I promise over the next few days, I will actually post another video talking about market structure, talking about top-down analysis. And this is where I want to go into a little bit more detail about top-down analysis, having a look at the markets, why certain scenarios would play out and wouldn't play out. And more than anything else, we've looked at a lot of charts that have played out, a lot of scenarios that have gone in our favor. This time I want to speak about a trade that didn't go in our direction and how we would have been able to stop ourselves from actually taking it. So the normal videos are coming, don't you worry. But this was really important for everyone to know. This is really important, in my opinion, for everyone to actually follow and stay on top of it. So keep up with the news, read different things. Don't necessarily believe everything that they are saying, especially the way that they portray this Reddit community is just a bunch of traders. That's how it is, very simple. But keep on top of the news, read more about it. And I really do hope that this video gave you a little bit more information about this whole situation and about how the whole thing works. So I shall catch you in the next one. Let's elevate and let's catch some pips.